All right, so let's get started with the first one here. President Biden's junk fee crackdown, right? So the White House put out a statement that they are proposing through the Department of Labor an update to the definition of an investment advice fiduciary standard under the ERISA Act. And it would ensure that financial advisors, brokers, and insurance agents would be held to the fiduciary standard on rollover RIAs. In the past, obviously, the rule was held more on retirement accounts like 401ks, et cetera. They're now trying to broaden that fiduciary responsibility to roll over RIAs, and specifically, they kind of touch on annuities, right, where insurance agents could kind of recommend those products, and those that regulation for those type of products for RIAs are usually done through the at the state level. So that's where they seem to be focused. As always, when it comes to these proposals, the devil's in the details. But it's a good start for the government to try to take a stab at attacking some of this junk fees, especially when it comes to annuities that insurance brokers try to sell to clients in their RIA accounts. The second headline here is Charles Schwab announced a mass layoff of 2,000 employees across here in the United States. No doubt this has to do with the further consolidation of TD Ameritrade and Schwab. We'll see how much of an effect it has on service, considering a lot of these layoffs were done on the custody side, on the RIA custody side of the business. The third one here is Fidelity made an announcement that is removing high yield funds as automatic cash sweep options for RIAs. So to be specific, what they're saying here is that starting later this year, F-Cash, which is Fidelity's core cash option, will be the only automatic cash choice available for all new brokerage accounts opened by custody clients. And that F-Cash current yield is 2.26, which is much lower than other money market options out in the marketplace. So essentially what you're going to get as an RIA is you're going to have to kind of, like similar to Schwab, it creates more work for you to move cash accounts to make sure that they're not getting paid 2.26 versus what's out in the market at 5%. Schwab already has done this. I think they pay their current bank sweep rate is at 0.45. So Fidelity would still be higher. But now Fidelity will be much lower than, call it, like what market rates would give you in a money market currently. That's it for this week on what is affecting RIAs out there in the market. Have a great week and look forward to chatting next week.